Imagine investing $10,000, doing absolutely nothing for 30 years, and waking up with over $170,000. Now, imagine another person checking the market every single day, buying every hot stock, listening to every expert, working 10 times harder, and ending up with less money. How is that possible? Because successful investing isn't about finding the next apple. It's about avoiding the mistakes that almost everyone makes. Today, you'll learn 5 simple rules that have quietly built fortunes for generations. Most people see a stock as numbers moving on a screen. Successful investors see something different. They see a business. When Warren Buffett buys Apple, he isn't buying a ticker symbol. He's buying millions of loyal customers, powerful products, and a company that makes billions every year. The next time you think about buying a stock, ask yourself one question. Would I want to own this entire business if I could? If the answer is no, why own even a tiny piece of it? Quick question. If someone gave you $100,000 today, would you invest it all in one company or spread it across many companies? There's no right answer. I'm genuinely curious. Let me know in the comments before we continue. Everyone wants to buy at the bottom and sell at the top. The problem? Nobody knows where the bottom or the top is until it's already over. History shows something surprising. Someone who invested consistently, even during crashes, usually ended up wealthier than someone waiting for the perfect moment. The best time to invest wasn't yesterday. It's whenever you're ready to stay invested. The stock market is a machine designed to test your patience. When prices soar, greed whispers, "Buy more." When prices crash, fear screams, "Sell everything." Successful investors ignore both voices. They follow their plan, not their emotions, because markets recover. Panic rarely does. Many people believe more complexity means better returns. It usually doesn't. Some of the world's most successful investors simply buy low-cost index funds, keep investing every month, and let compound interest do the heavy lifting. Simple doesn't mean easy. Simple means repeatable. The biggest gains rarely happen overnight. Amazon, Apple, Microsoft, Nvidia, their greatest investors weren't the ones who bought first. They were the ones who stayed invested the longest. Wealth isn't built by predicting tomorrow. It's built by giving great investments enough time to grow. If you forget everything else, remember these 5 rules. Invest in businesses. Don't chase perfect timing. Control your emotions. Keep your strategy simple. And think long-term. Because the stock market doesn't reward the smartest investor. It rewards the most patient one. And sometimes, patience is the greatest investment you'll ever make. Every chart tells a story. Every company hides a strategy. And every market crash teaches a lesson. If you enjoy uncovering the hidden world behind money, investing, and the global economy, subscribe to Behind the Market. Thanks for watching, and I'll see you in the next episode.